A very, very important day for the country. I think the AI action plan is actually extremely well done. If you think about the core tenet, you start with AI is the most transformational technology of our lifetimes. And then you extend that to the U.S. should absolutely lead in this area. I think this AI action plan is really a call for all of us to come together between public sector, private sector, bringing our best technologies, bringing our best ideas, open ecosystems, and to come together and really, solve some of the most important challenges in the world. So yeah, I think it's a great day. It's great to be here with so many people from different parts of the AI ecosystem, and we're enjoying it.
As you know, Lisa, sometimes I like to get a little bit in the details, and so when I think, for example, about MI 300X, energy and efficiency, and when I was reading through the policy document, energy is clearly a consideration here. Was that something that you and AMD were concerned about? As all of this infrastructure gets built out with your technology underpinning it, what was the anxiety level about, well, we're not going to be able to power all of these things?
It's a great point, Ed. I think what we see is, computing is the foundation. So high performance computing is the foundation to unlock all of this AI potential. We want to make sure there's enough power for all the chips that we're building. And more than that, we want to make sure that, the U.S. is actually leading that race. And so, we're very focused, as you know, Ed, on energy efficiency. Like, we want our chips to be the most energy efficient chips. That being the case, the demand is so high for computing that, we need to ensure that the power is available. And so all of the conversation about how do we accelerate the building of data centers and power capability in the country, I think is very, very welcome.
There's an element of exporting the American technology stack. The biggest piece of news, of course, in the recent weeks has been the ability to sell some semiconductors back into China. But when you read the AI action plan, do you get a sense that there's a next step to that? I'm not necessarily talking about a replacement for the diffusion rule, but it seems as if the policy is that it's good for America to export its technology to the world, even to economic adversaries, for want of a better expression.
I think it's a super important point. And, the point is, computing is a matter of national security, but it's also important from an economic standpoint and an overall ecosystem standpoint. So it's all about a balance. And the balance is we certainly want to ensure that we're using our technology to make America stronger. But we also want the rest of the world developing on our technologies. And so this is the balance. It's a tricky dribble, by the way. I will be the first to say it's a tricky dribble. But I think the administration has been doing a good job, just working with us in industry and also ensuring that we understand all of the constraints. And we welcome the fact that we want the rest of the world using American technology, and we welcome all the conversations and dialogue in those areas.
The UN predicts that the AI market will grow rapidly, from a 2023 valuation of $189 billion to a 2033 estimate of around $5 trillion. Nevertheless, one of the most well-known AI stocks available today is still shockingly inexpensive in spite of these enormous expectations. Searching for an AI stock that will profit directly from a significant increase in demand over the course of the next 10 years and beyond? Look into NVIDIA. Even though the company is already well known to many investors, you might not be aware of how inexpensive the stock is. With NVIDIA stock, some have already made a fortune. However, there's still a long way to go. Before delving into NVIDIA's unexpectedly low value, let's take a moment to recap what makes this stock so unique. The world's biggest GPU stock is NVIDIA. Data centers all over the world are powered by its hardware, and AI developers depend on these facilities to create, train, and implement their models. NVIDIA's GPUs are at the heart of the AI value chain since end users also depend on data centers to access AI services. According to recent projections, the business might control 90% or more of the market for GPUs intended for AI applications. How did NVIDIA become so powerful? Sebastian Nagy, an analyst at William Blair, claims that NVIDIA made significant investments to create the broadest ecosystem of software tools and developers, thus giving it control over the hardware and software components of its GPUs. It's just so much easier to build an AI model and an application on top of those chips, Nagy continues. Through early investment, NVIDIA gained a competitive edge in the AI GPU industry. Meanwhile, its emphasis on software gave their chips a stickiness that allowed consumers to personalize them. In addition to hardware, switching to a rival chip involves software integration, giving NVIDIA a strong buffer around its business strategy. For years, NVIDIA's revenues have increased by double digits. It also has the highest gross margins in the sector. However, as we shall see, shares continue to be remarkably inexpensive. The stock of NVIDIA appears pricey at first glance. For a multi-trillion-dollar stock, shares are trading at a premium of about 30 times sales. On the basis of earnings, however, things much improve. Indeed, the current price of NVIDIA's stock is 54 times its trailing earnings. However, given how rapidly sales are increasing, it's critical to consider the company's future valuation. Shares are trading at only 39 times forward earnings, which is based on what the company is predicted to make over the next 12 months. In the meantime, another chipmaker, Intel, is having trouble making money. Its revenues are expected to fall by around 5% over the next fiscal year. The company is having trouble staying relevant in the next-generation GPU market because it did not invest in the AI opportunity. We may quickly determine NVIDIA's primary advantages by contrasting the two companies on a few important measures. Both in the short and long term, NVIDIA is in a strong position. Meanwhile, Intel's future is still up in the air for both periods. NVIDIA is doing pretty well in comparison to rivals like Intel. Is 39 times earnings a bargain valuation, though? If you continue to perform the arithmetic, it is. For almost 10 years, the AI market is anticipated to grow by 20% to 30% a year. Based on the current trading price, NVIDIA's stock will soon trade below the market since the S&P 500 is trading at 30 times earnings. Patience is the key here. High sustained growth rates will soon reduce the upfront valuation premium if you want to retain NVIDIA stock for an extended period of time, making the stock an excellent investment in retrospect. There will likely be a lot of volatility along the way, just like with any high multiple stock. However, NVIDIA continues to be shockingly affordable for patient shareholders who are placing long-term bets on AI firms. As of this video, a $1,000 purchase in NVIDIA stock 5 years ago is currently worth $16,000. The stock's impressive rise over this time frame is warranted because artificial intelligence, AI, has allowed NVIDIA to achieve a notable rise in revenue and earnings. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. But now, investors might be questioning whether NVIDIA can maintain its position as a leading growth stock for the ensuing 5 years. After all, with a market valuation of almost $4 trillion, it is currently the biggest corporation in the world. A 16x increase in share price would push NVIDIA's market capitalization beyond $64 trillion, making it hard for the company to duplicate its multi-bagger gains over the next 5 years. In 2028, the value of the world economy is projected to reach $124.5 trillion. Therefore, compared to its existing contribution of about 3.5% of the global gross domestic product, GDP, NVIDIA's approximately 45% share seems ludicrous. Nevertheless, despite the astounding returns NVIDIA has produced over the last 5 years, don't be shocked to see its market capitalization increase. Let's examine the potential benefits that this massive semiconductor company could offer by 2030. NVIDIA is anticipated by analysts to generate $200 billion in sales during the current fiscal year, which concludes in January 2026. That would represent a 53% improvement over the prior fiscal year. Analysts predict a slowing in NVIDIA's revenue growth over the next 2 fiscal years, which makes sense given the enormous revenue base that the company has already attained. However, analysts are likely ignoring the enormous potential in data centers that might enable NVIDIA to easily surpass estimates. Through 2030, a significant amount of money is expected to be spent on data centers to serve workloads that involve both AI and non-AI. According to consulting firm McKinsey, 3/4 of the $6.7 trillion that will be spent on data center infrastructure through 2030 will go toward workloads that are unique to artificial intelligence. According to McKinsey, $3.1 trillion of the $5.2 trillion anticipated to be spent on AI-focused data center investment would go to technology designers and developers who create the chips and computer systems utilized in data centers. NVIDIA is well positioned to take advantage of this enormous end market opportunity in the future due to its dominant position in the AI processor market. One estimate states that last year, GPUs made up nearly 60% of the market for AI accelerators. GPUs might still generate over $1.2 trillion in revenue even if their market share drops to only 40% by 2030 due to the growing need for specialized AI accelerators. Last year, NVIDIA held a 92% market share in AI GPUs. Despite being the closest rival in this sector, AMD's data center GPU income is far less than NVIDIA's. AMD may be able to catch up to NVIDIA in terms of technology thanks to its product development efforts, but NVIDIA has a supply chain advantage. According to reports, NVIDIA's foundry partner TSMC has committed to using 70% of its capacity for innovative chip packaging by 2025. That's significant because the creation of AI chip platforms depends on sophisticated packaging. As a result, it appears unlikely that NVIDIA will lose control of the supply chain and the market for AI chips. The chip creator currently has about $43 billion in net cash on hand. Given that AMD only has 10% of that amount available to it, this enables NVIDIA to capture a sizable portion of the AI supply chain for themselves. As a result, NVIDIA can maintain its dominant position in the AI chip market for the next 5 years, which should result in positive growth. Even though NVIDIA dominates the market for AI processors, we predict that within 5 years, its share of the AI GPU market will drop to 50%. Even in such scenario, the company's data center income might reach $600 billion, according to the previously determined $1.2 trillion AI GPU market estimate for 2030. In the first quarter of the current fiscal year, 88% of NVIDIA's revenue came from its data center business. Data center revenue could reach nearly $180 billion if NVIDIA's current fiscal year generates $200 billion in revenue, of which 88% comes from the data center segment. In the next 5 years, NVIDIA's data center revenue might increase by more than 3 times, reaching $600 billion. After 5 years, the corporation may still see strong stock price increases if it just makes money from data centers and receives no income from its other business units. The average sales multiple for NVIDIA over the last 5 years is nearly 24. Based on the estimated $600 billion in revenue, its market capitalization could reach $7.2 trillion if it trades at half of that multiple after 5 years. Investors can still think about purchasing this AI stock because it appears to be positioned for further growth over the next 5 years, as that would represent an 80% increase from current levels. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.